Welcome to this webinar, everyone. Today we're going to be doing a deep dive into the financial crime risks that startups can face when they take on new investments. And we'll be exploring what you need to do to check that check. My name is Nadia O'Shaughnessy and I'm Head of Research at Themis, an award-winning financial crime tech platform. It's a real pleasure to be hosting today's session with two founders from the SeedLegals community, John, who's CEO and founder of Sook, and Dickon, CEO and founder of Themis. At Themis, we ourselves have been through a number of investment rounds, so we really do understand the importance of attracting the right sources of funding. And I think this is also why the team at SeedLegals have asked us to come in and speak today, to share our experiences and those of companies like Sook that we've been supporting. But you'll all know better than me that investors can make or break the trajectory of your company. And founders are, of course, under significant pressure to attract investment they need to grow a business, perhaps now more than ever, given today's quite volatile and tricky investment market. Cash is still king, and we all need the capital to provide the fuel for our new ventures and for investments in our people, our technology, and all the other building blocks that make a business sustainable and successful in the long term. But there are significant financial risks and other risks if due diligence is neglected in that rush to secure funding. And that's what we're going to be exploring in today's session and fleshing out some of these risks, and most importantly, how to mitigate them whilst continuously looking to ambitiously attract investment. But anyway, without further ado, I'm really pleased to introduce our panelists today, John, Elle, and Dickon. John Hoyle is founder and CEO of Sook. After a career as platoon commander with the British Army, serving in Germany, Iraq, and London, John became a development manager in Abu Dhabi, and on his return to the UK, worked for the London Organising Committee of the Olympic Games. John founded Sook in 2019 to address the acute problems facing the UK's high street and the imbalance in the relationship between landlords and occupiers, so that both sides could thrive in a much fairer and more mutually beneficial way. Since then, John's opened Sook spaces on London's Oxford Street, in Cambridge, Gateshead, and Edinburgh, with, as I understand it, significant UK and international expansion planned for the next year and beyond. Dickon is founder and CEO of Themis. Before launching Themis, he held a number of senior positions in banking, including as the CEO of Fab in the UK. Dickon has over 18 years of experience in banking and consulting and has lived, worked, and travelled extensively in the UK, Europe, and Middle East. Over the course of this career in finance, Dickon became increasingly exposed to the harsh realities of the underground and shadow economy and the very real impacts that he saw financial crime having on businesses, people, and our planet. And he was determined to do something positive about it. So he's gone and built Themis, the technology needed to track criminal activity and networks, which aims to reduce the global impacts of financial crime and really make it hard for criminals to hide their illicit undertakings and connections. And we're also joined today by Elle Humphrey, who's a financial crime researcher at Themis and is really the brains behind many of our recent research projects. Before she joined Themis, Elle worked as a political analyst in the natural resource sector, and she has a master's from the LSE with a distinction. I know Elle's got lots of juicy case studies prepared for us today, so looking forward to seeing those shortly. Anyway, welcome, John, Elle, and Dickon. It's really great to have you all with us today. And I've got just a few warm-up questions to get us going. So first, John and Dickon, you'll both be used to, I'm sure, endless Dragon Den style pitches. And I've said a bit about Themis already, so maybe John, could you give us the Sook elevator pitch?
Of course, and thanks for having me. Sook rents space by the hour. We want to make it much easier for anyone to occupy the tens of thousands of physical spaces across the UK and hundreds of thousands in developed markets across the world by having an hourly rental model that's facilitated by the kind of device that you can see behind So you can easily put digital content on the walls of a space and use it for whatever you want. We have retailers, wellness, office meetups, big TikTok activation in Edinburgh at the moment, sort of all sorts of uses that we haven't historically seen on the high street, that are all generating much more revenue for landlords than they can get through a headline rent. So we're hoping to bring this brand new model, as I said, across the UK and beyond, sites coming in the Middle East and North America to add to our growing portfolio in the UK. And it's a really exciting time for us as hopefully we underwrite some of the recovery coming out of the pandemic, allowing people to thrive, using physical spaces and engage with their customers on terms that work for them at times that are convenient for both them and that audience.
Really exciting. Thanks, John. And I know the Themis team as well have been really keen to put on some events in your Sook spaces, so we're looking forward to that. Dickon, turning to you, what do you find the best things about being a founder? What do you particularly like about it?
Hard question. Thanks, Nadia. Firstly, thank you to SeedLegals for inviting us to speak today, which really, really appreciate. So what are the best things about being a founder? Well, I guess sort of as we're amongst fellow founders, how about sleepless nights, extreme weight gain, financial insecurity, meltdown, COVID, inflation, complete absence of any form of life, maybe. Sort of kidding, but well, I'm also not really kidding. Three things I would say properly. So firstly, for me, as a founder, the real joy is building something that matters and makes a positive change. So look at our friends from Sook, saving the high street, creating jobs and opportunities for small businesses to flourish. And you've got independent retailers, fashion eaters, artists, footballers creating queues around the block for their Sook pop-ups when so many of our high streets are being boarded up. So that's pretty amazing stuff and inspirational stuff, John. At Themis, we're tackling also one of the most serious and underreported issues of the 21st century, the rise of the shadow economy. So we're talking about the 1.6 to 2.2 trillion that criminals and organized crime groups make every year at significant cost to people, to businesses, and to environment. And my biggest buzz as a founder is when clients tell me that we've saved them from a potentially damaging relationship because they found information that they couldn't find anywhere else, linking a potential client or investor or supplier to, say, a sort of Hong Kong triad, or an arms smuggling gang in Libya, or a drugs cartel operating through front companies in Panama. All true stories, by the way, but that's really, really important to me. I also love finding new technology and innovative solutions. So we at Themis use AI and machine learning to help founders, investors, and businesses, large or small, detect potential links to criminality across the world. So in that way, we're empowering businesses to really understand who their clients, suppliers, and investors are in a way that is quick, efficient, so simple to do, and affordable. And I'm incredibly proud of what we've built so far. But I'd also shout out to other businesses that provide that technology, such as SeedLegals, a classic example. So SeedLegals allow us to run all of our contracts, our investor agreements, EIS share certificates, and basically everything we need to do to complete our funding rounds on one platform without having to pay exorbitant legal fees or manage reams and reams of paperwork. So thank you. And as a result, obviously, we were able to overfund in our seed round, and I think we'll do the same in our current pre-Series A. And lastly, but most importantly, despite being a tech founder, I love the people I get to meet and work with every day. So from fellow founders, many of you here today on this call, to our loyal clients, to our hugely experienced shareholders, and my wonderful team, all of whom I learn from every single day. And when we have dark days as founders, and believe me, there are some, it's the people around us who keep me going. But when we have good days and successes, obviously celebrating together is just brilliant. And that's really what makes it all worth it.
So Dickon's told us about some of the fun stuff, but I can imagine that those unfun things that he mentioned at the start are a big part of a founder's life as well. John, what to you is the hardest part of being a founder?
I think it's probably the relentless problem solving. You know, there are so many things coming at you on a daily basis, most of which are unforeseen. Trying to execute on your plan with all of the noise, the distraction, the interference, and the change, it is a real challenge, and it's a mental battle, because you can work incredibly hard implementing all the stuff that you want to implement, and some sort of uncontrollable outcome can blow it all out of the water, and that just happens constantly, and you've got to pick yourself up and just keep pushing forward. So that's why it's so interesting to talk to businesses like Themis and SeedLegals, because they're solving problems for you in a way that's accessible and affordable. And I always say to my new hires, particularly the kind of leadership group are really important to me, I just say, please make my life easier. You want people that make your life easier. You want funding solutions that make your life easier, and you want to avoid all of these unforeseen booby traps, let's call them, that potentially exist in places that you've never seen before. I'm a first-time founder. I don't have the luxury, really. I'm at the extreme of my kind of experience, and that means that I just don't know the answers for everything or what's coming in the future. So anyone that can give me solutions to things, particularly if I haven't even thought about that problem in advance, and financial crime was one of those things, then that solves essentially my biggest issue, which is bandwidth to solve problems.
And that's it, John, because unfortunately we've seen that financial crime can be very much an unforeseen booby trap, as you call it, that can unfortunately afflict startups. So that brings us nicely to the core of our discussion today. And Dickon, could you tell us a bit more about what might make a startup an unwitting target of financial crime?
Sure. Okay, well, thank you, Nadia. So I guess to prepare for this talk today, we actually asked the audience for your views. So I hope all of you will have received a survey over the last sort of couple of weeks. And the responses we've had back have been really interesting. So thank you very much for doing that. The survey shows us that 64% of you are somewhat or very concerned about the financial crime risks and impacts to your business specifically. Now, why is that the case? Well, in my opinion, recent geopolitical events and public scandals have really brought this issue to the fore. So every day we're seeing news reports where companies are being publicly rinsed because of a discovered association with corrupt officials, fraudsters, or state actors buying up our assets and destabilizing our democracy through the spread of misinformation and cyber attacks. So whether it be the war in Ukraine and the evolving sanctions landscape, to illicit gold flows or international laundromats, companies no longer see financial crime as a legal and regulatory issue, although that's obviously still very, very important. But much more importantly now, I think people are really seeing this as a financial, reputational, ethical risk. We also know that no one is immune to that sort of reputational damage. So even Prince Charles, for example, has come under increased scrutiny this week after accepting large sums of cash from the bin Laden family and previously from the sanctioned Russian oligarch Ruben Vardanyan. We see many of the major political parties attracting the same sort of negative headlines, and more this is spilling over to businesses large and small. And we also see our consumers, our investors, and even our team members increasingly voting with their feet. So this is really, really important for founders to get right. Sadly, the startup world, though, is particularly vulnerable to attack. It's a largely unregulated market, making it a target to those who are seeking new avenues to launder illicit funds and partake in other forms of financial crime. So criminals can make an investment with illicit funds, obfuscating its origin knowing that any dividends from these investments are automatically and demonstrably clean as they then become the sort of proceeds of a legitimate startup activity. So once they've invested in your business and the money comes out the other side, they have a legitimate audit trail of where that money has come from. And that is now sort of clean money, which obviously makes this market very, very attractive to fraudsters and criminals. Just picking back to our survey as well. So we know that 64% of this audience are planning to pursue a funding round in the next 12 months, meaning that as founders, we're all at risk of being targeted, even if you have avoided it so far. And again, launderers are really well aware that startups are hungry for investment. And so in some cases, not all, are less likely to undertake as much due diligence as, say, a large financial institution. So, you know, let's be here today and make sure that those SeedLegals founders and audience members here don't face those same targets and attacks. What is the impact of that, and what does that mean for founders? Well, accepting illicit funds linked to any form of financial crime, whether knowingly or not, can have pretty devastating effects on your company's financial well-being and future. And actually, as John sort of said, it's the unknowns that come and hurt you. And this could be one of those sort of hand grenades, hidden hand grenades, that could destroy everything if it's sort of left unchecked. And certainly from my position as the CEO of Themis, I've seen many, many examples firsthand where founders haven't taken this seriously enough and therefore have been subjected to some pretty significant legal, regulatory, financial, reputational risks. And lots of unwanted associations that they just didn't want or didn't go out looking for. So does that answer your question, Nadia?
Yes, perfect. Thank you, Dickon. And I think this is a great point to bring in Elle to the conversation, because Elle, I know you've been doing a lot of research about these risks, and I mentioned you had some nice case studies to potentially show us at the start. So wondered if this might be the moment for that.
Yeah, of course. Thanks everyone for being here today. There are a lot of different case studies we can explore, but I did pull up one interesting one that I found with Themis search. So I'm just going to share my screen. Here we go. Are we seeing that?
Yeah, I can see it perfectly. Thank you.
Great. So this is a case of a barrage. You may be familiar with it, but this specific story is, I think, relevant for startups in particular. So the story goes that in 2016, a Dubai-based private equity group, a barrage group, set up a sub-PE firm called the Barrage Growth Markets Health Fund, which I flagged here. And this is a $1 billion private equity vehicle, which purported to be, and I quote, dedicated to building affordable, high quality health ecosystems in South Asia and Sub-Saharan Africa by investing in healthcare startups in emerging markets. So it sounds pretty good, right? Quite do-gooder stuff going on. And hospitals were, of course, eager to sort of acquire funding to sustain their important work, their developmental work, humanitarian work. And 8 clinics and 10 hospitals in Kenya alone accepted investment and or acquisition from this health fund. But unfortunately, in 2018, as you may know, the story broke that the Abraj Investment Management and Abraj Group, headed by Arif Nakfi, who's right there on our network analysis, had been inflating the value of these hospitals, of these assets, to investors, in addition to, directly misappropriating those funds. So the fall of Abraj Group and Nakfi's reputation and for legal consequences meant that suddenly funding streams were disrupted for these startup hospitals, and this led to significant consequences. To quote, they stared at an uncertain future following the collapse of Abraj. The fund was later taken over by TPG PE Group and rebranded, but this wasn't without, significant losses, tumult, reputational damage for these hospitals. And this could have been, I think the message is that this could have been avoided, through better due diligence. And I think it's interesting to look at Themis search and see how that's the case now. So just to show you, this is a network that I pulled up through some searches on the platform. We can see that these hospitals, here's 3 of the hospitals that received funding from Abraj. We can see that they're connected to Abraj Growth Markets Health Fund. So if we click on that, we can see that it's come under, so here it is, private equity fund. We can see that it's come under regulatory enforcement, and we can go ahead and click on that if we want to understand a little bit more detail. Okay, interesting. So we can see that the specific defendants are Abraj Investment Management Limited and Arif Naqvi. So that kind of could direct your due diligence to those 2 figures. So we can see investment management. Let's take a look at Naqvi himself. So first of all, just to show you him, there he is. You get background on who he is. But you can see he's got a lot of regulatory enforcement coming through from Dubai, as well as a lot of adverse media coming in. And these, both red flags, but this all came in after the Abraj fraud story broke. So I think it's also interesting for us to look a little bit at the guys involved in Abraj Group, the main group, the board of director members and others, which could have been done, before the scandal broke, in order to preemptively avoid something like this happening to a startup. So if we take a look, here's Abraj Group. Similarly, has a lot of adverse media, but I like to look at associated people on Themis search, and you can see all these people who are associated with Abraj Group. And I was clicking through them when I was doing this research, and I saw that, there's a couple interesting figures on there and interesting companies attached to them. So we can see they potentially had red flags that date well before the 2018 fraud. So let's select here. Okay, so we can see this guy is PEP by association, adverse media. And I think, interestingly, we can see some of that adverse media goes well before the 2018 crash, and can see that actually it looks like, and if you read up on that adverse media as I did, I saw that these guys were intimately involved in the weapons production process and industry in Saddam Hussein's tenure in Iraq. So, getting some interesting adverse media there well before the case of Abraj. And I don't know, I guess I pose this question to Dickon now. That kind of wraps up our case. So I would like to ask you as a sort of founder, what are your thoughts from a founder's perspective on that due diligence?
Thank you, Elle. I think that shows the importance of due diligence really nicely, but also the simplicity of how easy it is to find that information. So the fact that, the hospitals could have seen that very close link to convicted fraudsters, as well as sort of arms dealers as well, I think would have thrown up a lot of red flags. Personally, I would hope that as a founder, I probably wouldn't have accepted that money, but obviously it's not my decision. It's up to each business and their own risk assessment and their risk appetite. But I think you can see from that example that there are enough really, really worrying and strong red flags very, very quickly. And that's a sort of 2-3 minute investigation, so to speak. So not hard to do. So thank you, Elle. I think really, really interesting example.
Thanks both, and really agreed. And I think that even now in this volatile market, funding is particularly in demand, and making sure that this level of due diligence is done is all the more important. So turning to you now, John, Sook is an exciting and fast-growing company, and you focus on providing temporary and flexible retail spaces, as you nicely described for us at the start. But would you mind mapping out your journey as a startup in a bit more detail now for us and telling us a bit about the joys and the challenges of fundraising?
Yeah, of course. So, we're still a pretty early stage startup. We survived the pandemic. So I founded it in 2019 out of an accelerator in London called Zinc. So all about solving big social problems using tech. And we immediately garnered significant interest pre-pandemic from Legal and General and Transport for London. But of course, we then went into that period that we all know all too much, only too well, where retail couldn't be open. And fortunately, I had enough traction and had raised an early friends and family round that allowed our small team to get through that period and emerge from it with 6 new sites. Such was kind of, in many ways, the lack of options for landlords who are panicking about what to do with all of these empty shops. I've subsequently completed 2 more funding rounds. In total, we've raised £5 million from investors and about £2 million from asset managers who essentially fund our solution for us. We've really only got about 16 months of track record because retail was closed until April last year, as everyone's probably aware. And so, and maybe we built our startup slightly in reverse. We've not spent a penny on marketing yet. Yet we're driving about £150,000 of sales a month. So we're really pleased with that organic growth. We're about to launch a Series A to build on that and take advantage of the global opportunities that have now emerged with biggest asset manager in North America, huge UAE asset managers. We've got interest in 4 continents and are working with huge brands from Uber, MasterCard, SumUp, TikTok are in our Edinburgh site today, which is pretty exciting. And a whole list of other what we call our tier 1 enterprise customers, as well as probably more excitingly from a social perspective, a few thousand smaller brands who previously couldn't have used physical space. And with 40% of online brands wanting to use physical space to engage with their customers, we hope to be a really agile home for all of them to test, to learn, to build their relationships with their customers, tell a story, and then get out. And then there's a really important piece about it that's got nothing to do with retail, which is a strongly held belief that we should share things. And empty shops, are prevalent everywhere in developed markets across the world. But even when they're full, they're not used very efficiently. No one really needs a shop 7 days a week, apart from maybe a convenience store. If you're a fashion retailer, you only really sell stuff in certain peak hours. If you are a bank, you only really need the lunchtime slot on weekdays. And so what our model allows is actually multiple different occupiers across the course of the day. And that's proved to be something that's resonated both with brands who want desperate to save money. I just mentioned banking. I mean, that's one of the least efficient uses of physical space probably in the world. And landlords who want to embrace a whole new spectrum of occupiers, many of which probably sit within the SeedLegals ecosystem. I want to help the founders of the future engage with customers, test, learn, do so at low cost, so that they can prove their model and go global without the headache of real estate.
Brilliant, thanks, John. It sounds like you've really had a range of exciting successes after starting in what must have been a difficult time with the pandemic and an important mission fit for what's really a constantly evolving world. So brilliant. And I know you've used Themis to support you through some of this journey and through your previous founding rounds. So I wonder if you'd be comfortable sharing some of those, so to speak, war stories without naming any names, of course.
Yeah.
So what kind of risk exposure did you experience firsthand?
Yeah, well, I mean, just to build on sort of Dickon's earlier answer, you are really vulnerable when you're a founder raising money, because it is, I think, one of the hardest things you can do in your professional career. You are, one of a tiny percentage of the world who are courageous or crazy enough to, launch a business and try and get other people to believe in it and give you their money. And that is hard. And, you know, many investors are brutal. And whether your idea is amazing or not, you will get infinitely more rejections than you get acceptances. So, you know, after any sort of period of fundraising, I don't think there's any funders in the world that aren't feeling a bit battered. And that makes you perfect fodder for opportunists who know that, you know, you want to keep your baby alive, and funding is the way to do that. And we've been fortunate. We've a bit like Themis, been consistently oversubscribed. So there's not been, thankfully, that moment where I've really had to scratch my head, think about integrity to a huge level, and make a really difficult choice to keep a business afloat. But given that 99% of startups don't make it through the sort of pre-revenue value of death, a lot of people on this call should consider, you know, that will appear. And what happened to us in a couple of different occasions is we were made big promises by investors who had approached us, you know, effectively in one instance giving us the opportunity to completely solve our funding issue that immediately, which is pretty appealing, rather than talking to hundreds of VCs or angels who all have 1,000,001 different questions, challenges, and all of the rest. But in both cases, thankfully, we had enough about us, and we're not so desperate that we felt it was important to reach out to Themis and just say, does this smell right? Actually, I don't think definitively, in the worst case, we know for sure whether or not the money we might have taken would have caused us problems, but the strong suspicion based on numerous red flags was that it would. So, you know, those red flags are things like a direct approach from an investor, particularly in a country that has, let's say, an interesting reputation. In our particular instance, it was the biggest one was a Middle Eastern one. Direct impact, a large amount of money that feels perhaps too good to be true. You know, a lack of engagement or scrutiny and due diligence around that money. And then, you know, also a time frame that felt really straightforward. You know, it was just, it felt like a gift. And so we reached out to Themis, who, and I will hand over in terms of the exact sort of scrutiny that it went through, but the end result was that we decided just to pass on this lovely golden egg, which I would love to have accepted, and thus avoiding, we suspect, two probable outcomes. One, it's sort of a laundry for money that had some sort of reputational issue, or the other was actually at the end of a process that felt sort of like they were scrutinizing us and sort of like they might be a real investor, being asked for effectively a transaction fee that's a tiny fraction of the big number that they're promising to invest, which of course you might be so invested emotionally, frankly, at that time, or indeed have foregone other opportunities from fundraising that you've got no other options. And you're faced with, you know, oh, I'll give you £20,000 in order to receive a couple of million, and you will never see that money again. Now, we didn't get to that stage, thankfully, but those are kind of the almost confidence tricks that that we've come across. And I think it's also we've had also a couple of, who I just say, undesirables, who you just don't want on your cap table for reasons concerning, you know, their intentions might not necessarily be fraudulent or criminal, but their backgrounds are such that anyone really scrutinizing your cap table is going to have some serious questions about why you're taking money from them. And don't forget, investors are sheep. So they want to see credible people on your cap table, and people who have, I mean, through very simple checks, dubious backgrounds, possibly insolvent businesses, or just far too many businesses, and a sort of opaque nature around their background. They don't add any value to you anyway, and being really solid about checking those people out before just accepting their money willy-nilly, even though it's counterintuitive when you desperately want the cash, is I think prudent, and certainly I hope to be proved right in the test of time.
You're right, John, and we've seen that reputational risk come up to bite back, on a number of occasions. So in terms of your second case, absolutely see your thinking there. And in terms of the first case, so if you had taken that money, what do you think could have gone wrong? What do you think the consequences could have been?
Well, I mean, it might not have really become obvious until an exit, when which would be a great shame, wouldn't it, if you put your life and soul into a startup, create some enterprise value, and then actually you can't realize any of that because no one will touch it. That could have been a serious problem for us. The Themis team will understand better than I the sort of personal liability around it, but I suspect there is some. I mean, and I wonder whether there's even a safety element, at its extreme case. You don't want to be beholden to criminals. It's bad enough having bad investors who want you to do their bidding commercially but legitimately. But imagine having a criminal that, for whatever reason, wants to use you in a way that suits them. I dread to think what the extreme implications of that could be.
Absolutely. So Dickon, I wonder if you could add to this and also talk to us a bit from the Themis side, what due diligence does need to be done to make sure that a startup founder is safe on all fronts that John's just described when taking this check.
Thank you. And I think, first of all, sort of massive kudos to John and the team at Sook, because that's a very, very brave decision to make, but it's absolutely the right one to make. And you guys avoided some pretty significant challenges, sort of, had you accepted that money. So it's really nice to work with companies who are forward thinking and progressive and really well governed and structured, such as yourselves. I know also that there's many on this call, because there's other lovely Themis clients on this call as well, who are also taking those sort of proactive steps to protect yourselves, and that's brilliant. So that's sort of fantastic. But sadly and unfortunately, we do see a lot of businesses that don't take those steps, and they've either suffered those reputational risks, or, as John says, in some cases, the sort of personal liability, legal and regulatory issues as well. In other cases, it's a financial issue, pure and simple, and that can be incredibly damaging, particularly when you're trying to sort of maintain a strong and healthy cash flow for as long as you possibly can. We looked at some of the sort of survey results that came back from this audience as well, and interesting sort of analysis there again. So again, lots of really positive stories around those of you that are proactively protecting your businesses. Some of you also responded to the survey that whilst you do undertake some level of due diligence, some of you are using somewhat manual checks, so sort of Google searches or looking up directors on Companies House, etc., etc. So that's an important and good start, but there's obviously a lot more you can do, and there's a lot easier ways of doing it through technology that we'll show you. But slightly worryingly, although I do love the honesty of this audience, 62% of this audience admitted that they don't undertake any due diligence at all. Now, the flip side is, the good news is you also said, most of you, that you really wanted to know more, and that's obviously exactly why we're here today. So what are the right sort of checks that founders should be doing on potential investors? Well, to sort of try and put it in as succinct a summary as I possibly can, our recommendations would be to check that individual or that company from an adverse media perspective. So do they have negative news around them, potentially allegations of a fraud or of a particular crime anywhere in the world? It's also worth checking sanctions. Are they on any official sanctions lists? They're over, obviously, the sort of main ones, HMT, EU, OFAC in the States, but there are over 50 different international sanctions lists coming through Themis Search, and that's sort of updated every 6 hours. So again, really, really important, because it's actually illegal to sort of deal with sanctioned entities. So there's very time-bound risk there. It's also important to check political exposure. Political exposure doesn't necessarily mean they're a bad person. There are lots of very, very good politicians and people of high office. All it does mean is that they're at greater risk of being corrupted given their role. So it's important to do sort of more checks on them, as well as anyone who has obviously criminal convictions. From a founder perspective, source of funds and beneficial ownership checks are also really, really important. Again, do you understand how your investor made their money and where those funds are coming from? So what I would recommend is, before you go out and have your sort of first investor pitch, just do some initial checks or light screening, and that can be 10 minutes, preferably using Themis Search, but using any technology that you have. And that way you can find as much information as you possibly can about a potential new investor before you even engage with them in conversation. If things then progress nicely, as John said, you know, that can be sort of lots of highs, but also lots of lows. It can be very challenging, but also really exciting. But if things present really nicely with an investor, and you get that sort of yes and sign off before you take any investment of them, it's really, really important you do detailed investigation or a sort of deep dive review to make sure there are no issues. And then sort of once you've satisfied yourself that that investor is okay, and you do take their money, great, brilliant. It's important to keep monitoring their profile on an ongoing basis. So obviously people and companies change. You know, people can commit criminal acts in the future. They can be sanctioned in the future, etc., etc. And you don't want to be caught out by that as well. So it may all sound like a lot, and particularly for those who sort of haven't come across this before, but at Themis, we've obviously built a solution that lets you do that basically at the click of a button. So it sort of really couldn't be simpler, and it's not something you should be afraid of at all. Particularly in the current climate, there is one other lens that I would like to draw attention to. And so we can't underestimate in current climes the need for good screening for potential links to sanctions and sanctioned entities. That could be Russians, North Korean, Iranian, many, many others, individuals or entities who are seeking to move money offshore and obfuscate their origins. And obviously from our own research, we know that many, many sanctioned oligarchs, for example, have sought to invest their wealth in overseas startups, particularly to conceal their source of funds. But also, you know, let's remember that when we look at Russia, for example, many of the sanctioned Russian oligarchs have actually been sanctioned in the US for a good few years before the war in Ukraine started. So they're actually pretty good at hiding behind front companies, partners, shell companies, offshore vehicles, etc. And we've seen many, many cases where what looks like legitimate investment or client money flows actually come from source by 1, 2, or 3 degrees of separation from some fairly unscrupulous sources. So it's really, really important, and I can't stress enough how important it is to keep your eyes wide open and really do that due diligence. As I said, that's where our sort of technology and intelligence can help you spot those red flags, but it's also something sort of really nice and simple to do. Elle, I think maybe this is a good time to sort of hand the conch over to you. Maybe if you could sort of continue painting that picture just by showing us any sort of recent real examples that you found in the research?
Yep, absolutely. So as a second case study, be my pleasure. Just gonna re-share my screen. Sorry. Can you see that? Oh, sorry. Okay, so basically, there we go. All right, so basically, yeah, I think it is really important to look at specifics around sanctions right now, as Dickon said. And I think we can look at the ways that a startup in particular, we've been seeing this trend with oligarchs, can be impacted by unwittingly, not intentionally necessarily getting caught up in a network that ultimately forces them to sort of walk away from it, given the reputational risks. So I wanted to discuss today a specific case that I came across. It's called Map Anything. It's a US startup, and they took on a company called Columbus Nova as a lead investor in 2017. With a 33 million Series B investment. So pretty major stuff. So we saw that some due diligence probably would have shown that accepting those funds really was a dangerous way to go, exposing them to sanctions and negative reputational damage. So on Themis search, we can see here, I've clicked Columbus Nova, which from my reading about them, they've reportedly invested, in 38 tech startups. So a lot of room to be hit there, and has extensive adverse media and some pretty concerning associates as well. So let's just take a quick look. You can see all that adverse media and then associates here. I'll get to Michael Cohen in a minute, but before we get to that, I wanted to discuss Victor Vekselberg. So let's click on him. Okay, so immediately you can see there's some problems here. We can see that he's been recently, so here he is, his picture, but we can see that he's been very recently sanctioned, very recently by OFSI, by OFAC, and a whole host of other countries. There's also PEP exposure here, current level 2, a long history, law enforcement, and of course, adverse media. We can also see all of his connections, which is quite useful. We can also see that Columbus Nova is US associate company of Renova Group, which again is owned by Vekselberg and also under sanctions with adverse media, regulatory enforcement, asset freezes from the Ukraine National Security Defense Council. So really need to watch out. Clearly, it's pretty clear already. But I thought that an interesting part of this story is that, even more shockingly perhaps, the stuff that Themis search picked up around Columbus Nova's links to Michael Cohen, of all people, and that's Donald Trump's, he's a debarred lawyer and Donald Trump's fixer, and ultimately you can see here to Donald himself. So I looked a little bit more closely at the adverse media that came up on Columbus Nova, so this stuff, and I learned that basically Nova had made a payment of $500,000 to Essential Consultants here, and that's Michael Cohen's shell company. You can see shell company. And that same company was the one that Cohen used to pay off Stormy Daniels in $130K hush money. So this then provoked suspicions that Vekselberg was actually using Columbus Nova to pay off Essential Consultants to pay Michael for the fee to Stormy. So really, like, everything starts to add up in pretty crazy ways. And of course, Columbus Nova has denied this and also denied the ownership of Vekselberg. But we know that its actual owner is Andrew Intriter, who is the cousin of Vekselberg. So you can see he's pretty embedded in this, as well as the sort of Russian political machine. So very interestingly, if you go to Vekselberg, you can see that in his associated companies is this, I found this Fond Skolkovo, which is actually, if you click on it, a Russian state-owned enterprise, which is pretty crazy. And the FBI has actually reported itself that it's a potential avenue for Russian intelligence to pursue interests in the US, and he is the president of that organization. So pretty concerning links. A little bit of DD would have saved Map Anything, some risky ties. But yeah, I mean, Map Anything may not have known, what it was getting into, and it becomes pretty clear once you start doing that. I also just wanted to note right now, I can stop sharing my screen, but right now, some interesting legislative changes that have been coming up in the current climate that make it even more important to do that. So one thing we want to flag to all of you is that OFSI has passed a strict liability test, which means that it's basically a new level of scrutiny and rigor over companies, financial or not financial. And basically you can now be fined up to like £1 million for having sanctioned entities in your network. And importantly, that's whether you're aware of them or not. So even if you're not aware, you can still be fined. And that's not to mention the sort of reputational costs that we're all aware of, I think.
Yeah, thanks a lot, Elle. I think that new strict liability test is really important to mention, and it's a great way of visualizing it all there like that with a real case. So Dickon, let's assume we've done our DD on the investors or the potential investors and are satisfied that they're a good egg. But then, and we've taken them on, but then what's to stop them from committing fraud or other crimes in the future? Every criminal starts somewhere at some point. So who's to say your new amazing investor isn't going to hit the headlines later on for all the wrong reasons?
Yeah, very, very good point, Nadia. So exactly that. Once you've sort of done the detailed due diligence, it is important to keep a close monitor and a close eye on those investors that you accept. And that's exactly why we have designed our platform to cover both initial screening, deep dive investigations, and ongoing monitoring as well. So as a founder, I monitor all of my investors myself, as well as obviously our key clients and suppliers. And I do that on a daily basis, and it's all automated for me. So when I completed, for example, our last round, having done that detailed DD up front, I then loaded all of my investors onto the platform in a very sort of simple batch upload file. And now I get a nice friendly emailing telling me if any of my shareholders have done something wrong. Luckily for me, they haven't, so I can sleep comfortably. We have no sanctioned entities or criminals in our network. We'd be in a bit of trouble if we did as a financial crime specialist. I do have a couple of pets of politically exposed people. That's only because they hold or have held important leadership roles across the public sector and law enforcement. But I know who they are. I'm very comfortable with what they're doing, and that they're using their sort of positions of power for good. But that also sort of doesn't stop me from keeping a very close eye on their activities. And I do that again through our sort of monitoring tool. I mean, I guess, speaking personally as a founder, I've got quite an obsessive sort of early morning routine. So I get up in the morning, I feed the dogs, I make a cup of tea, and then before getting into work or getting on the train, I sit down and I check a few key things every morning. So one, my sort of live sales tracker, any client meetings I have for the week, any messages from my team on Slack. But I also check my Themis dashboard to make sure that none of my shareholders or my key clients or suppliers have any new adverse media on them, or none of them have sort of appeared overnight on any international sanctions lists, or they've committed any crimes or anything like that. So let's have a quick look at how this works. If I can just pull up my screen there. Obviously, because of sort of GDPR reasons, I'm not going to show you my real shareholders. So this is sort of dummy data. But here you can see an example of my sort of daily dashboard that shows me how many clients or shareholders I've got, and sort of what buckets they fit in, whether they've got adverse media, sanctions, political exposure, or criminal convictions. really nice and simple, easy to read, easy to use. And actually, we have lots of our clients who tell me that they check this over their coffee and croissant in the morning. So you could do it on your iPad, your iPhone as well. But let's assume in this example, I've been rash enough to take on investments from none other than Ruja Ignatova. So I'm sure many of you will have read Jamie Bartlett's brilliant book, The Missing Crypto Queen. I was just actually listening to the podcast series with my sons on a road trip we did recently, and it's just completely gripping and sort of hugely recommended if you haven't listened to it. And so Ruja Ignatova, who is she? She's been on the run since 2017. She was charged in absentia by US authorities for wire fraud, securities fraud, and money laundering. And in June 2022, she was added to the FBI's 10 most wanted list. She's the mysterious founder of OneCoin and accused of masterminding a multi-billion-dollar global fraud. So I want to keep an eye on her. I add her to my ongoing monitoring dashboard, and I can see her. And I'll get an alert if there's any sort of further adverse media, criminal litigation, PEPs or sanctions activity. I can also do a deep dive investigation. This shows me, here she is here. So she's got a UK address and a new business in Wales, which is interesting in itself. But you can also see here an automatic network map. So all of her businesses and directorships, plus any red flags or issues, not just with her, but with any of her associated parties as well. So a huge amount of information that you can find very much at the click of a button to sort of really keep a close eye on your shareholders or on any future clients or suppliers as well.
That's amazing. Well, keep us updated, Dickon, on Ruja, and I'm sure when it comes to shareholders and suppliers, it will stay that way, but one can never be too cautious. You're right. So back to you, John. I mean, we've heard about a lot of quite scary risks here. Has this scared you off, or are you sort of going to be doing another funding round? And if so, what will you be doing differently?
Well, I mean, it's great to see all of the, those big names, but of course, in reality, for a lot of us on this call, it's a lot less glamorous in a good way. It's who wants Ruja Ignatova on the cap table. But my point is the same. You can still uncover a huge amount through this due diligence about the business interests of legitimate non-criminal investors, which is, I find, increasingly important for understanding whether they're going to add value or be an absolute nuisance to our business. And investors can make or break your business. So I'll be using it for perhaps the less criminal element and the more, I suppose, tactical and value add perspective to really ascertain the bit that you can never know until the investors, really in bed with you, which is whether they are going to add the kind of value that they say they can add, which in many cases, just doesn't materialize.
Thanks, John. And as you know, we're always here to help. But I think it would be interesting now, we're nearly out of time, but to open the session up for a couple of audience questions, because I can see lots of really good ones coming through. And please do keep sending them through and we can answer them offline as well, no problem there. So I think we have a first question coming through from Sarah. And Sarah asks, as a startup, am I regulated? And what are my legal and regulatory responsibilities? Is this my job? Maybe one for Dickon. Are you happy to answer?
Yeah, I'm happy to take that one. And actually, it's very similar to one of the questions in the chat function as well. So I'll try and answer both at the same time. Is it your job, or is it the responsibility of maybe a bank or a financial institution that you're dealing with? Unfortunately, it is your job. It is the short answer. So the laws and sort of regulations that we all are exposed to mean that even if you are not a financial institution, or even if you're non-regulated, there are specific laws and penalties that can be applied directly to you or your business. So for example, every one of us can be charged with Proceeds of Crime Act. So for sort of handling or arranging any proceeds of illicit activity. Sanctions regulations and their enforcement apply to all businesses, unless there are a couple of specific exemptions. For example, some sort of medical service suppliers may be omitted, but that's more because of their sort of humanitarian purposes. But broadly, we're all subject to sanctions requirements, and anyone breaching OFAC or US sanctions can be fined. More importantly, they can lose their dollar clearing license, which can be a significant business blocker if you've got a sort of international reach. In the UK, the new OFSI powers to improve penalties for sanctions on a strict liability test. So this came into force in mid-June, for example. You can be fined up to £1 million or 50% of the value of that breach. And that's applicable regardless of whether or not you were aware of the sanctions within your client's investor network or supply chain. So really what in the UK they're saying now is sort of whether you knew about it or not, that doesn't become a defense anymore. And so again, any sort of businesses operating or taking proceeds from sanctioned individuals or entities is potentially in trouble. You've also got other different laws and regulations. Often people think of financial crime as money laundering and sanctions, but you've also got to think about things like bribery and corruption, and we're all applicable to the Bribery and Corruption Act as well. So there are specific penalties for all of us. Whether it's my responsibility or not, yes, it is. So even if your bank has done financial due diligence, you as a founder or as a business operator should demand to see that. And if you're not comfortable with the level of due diligence they've done, you should do more yourself. And in fact, I would always encourage our clients to do their own due diligence. It's really straightforward. If you've got the right technology and tools to do it, it's not difficult at all, but saves you from a whole heap of pain later down if you get caught out.
Thanks, Dickon. Conscious we're really tight for time, but there's one good one in for John as well. So John, if you don't mind, this is from Tom. How do you balance being a disruptor in the sector, but also closely monitoring for risks and being very responsible?
That's the constant battle of being a founder, isn't it? Doing the right thing for the world, the right thing for the business, and keeping it all afloat at the same time. It's why, being the founder is the toughest job in the professional life, because you've got to balance all of those things. And I don't think there is a clear answer to it. I always sort of talk about it in the form of management, which is, I think founders are often not the experts in all of the little things that can become the booby traps that we talked about earlier. And it's about having trusted advisors to help you. And that's why we'll continue to be a customer of Themis, because I need that expertise. I'll never have it myself, even if unless I dedicated my life to what you do. And it is, as I think we've demonstrated through multiple case studies today, such potentially devastating risk from things that feel, really not that big a deal if you're not aware of it. So
thanks, John. And to anyone on this call, if you would like to find out more about how Themis can help you as a founder, then we'd love to give you a short demo of our Themis search and ongoing monitoring platforms that Elle and Dickon showed us on the screen. So just drop us a line or book a session via our website and we'll get that sorted for you. But anyway, time is really running out, so we won't be able to cover all of these excellent questions that are coming in, unfortunately. Please do send those through by email, though, or we'll reach out to you after the session as well. But as we wrap up, I'd like to say a huge thank you above all to Anthony Rossio of SeedLegals, Tom and Sonia and the whole SeedLegals team for giving us this wonderful opportunity to speak to you all about a topic that is so important to us. We love being part of the SeedLegals community, as Dickon said before, and as John did too. It's really such a unique platform network of support for startups that are navigating their way up. So thank you for that. And John, Dick and Elle, thank you very much as well for your time. It's been fascinating to hear from you, and really appreciate you joining us to share your stories whilst juggling what I know are really very busy startup founder diaries. And of course, to our audience today, thank you for tuning into this webinar and for listening to us. And I wish you all a great afternoon.